There's no denying that artificial intelligence is leading the current crypto narrative. In fact, price action within coins such as FET, Phoenix, Ocean, Injective have all proven that maybe AI coins do have some bite to them. However, there's a little forgotten coin that made headlines back in 2021, which is slowly making a comeback in popularity. That coin is Render. Now, in short, Render is a peer-to-peer network of connected graphic processing units, or GPUs, that allow users to rent out their extra computing power to those who might need it for digital rendering. But what does that all actually mean in the real world, and how does it fit into the AI narrative? Well, let's explore further. From Netflix anime to Facebook's metaverse, modern trends in digital entertainment rely heavily on the production of motion graphics and 3D effects. But it doesn't stop there. Developments in 3D graphics also have a significant number of commercial applications, such as creating product prototypes, scientific research, and architectural design. Now, the production of both motion and 3D graphics is heavily reliant on a process called rendering. This is where a laptop's or computer's GPU converts an input model into a visual display. Unfortunately, our devices do not have unlimited GPU capabilities. As a result, as graphics continue to become more complex, our GPU needs to increase. Render is a platform that lets users contribute unused GPU power from their home devices to help others to render their motion graphics. In exchange, they earn Render tokens, the native utility token of the Render network. This creates a peer-to-peer network in which people can tap into underutilized computer power cheaply and efficiently. Render greatly simplifies the traditional process of rendering, along with saving users significant time and money, since they don't need to purchase high-end computers to handle these in-house tasks. On a more technical basis, Render solves 3 main pain points for its customers. Number 1, scalability. One of the core processes of Render is its development of a scalable GPU network. The protocol leverages an automated reputation and job assignment system, which is able to grow linearly to meet increasing GPU demands. This open but scalable network vetting protocol presents an efficient alternative to physical marketplace solutions. Number 2, Render users have options both on the user and the provider side. This allows for enhanced operational efficiency. This is especially important given the different scales of projects which will require different levels of GPU processing power. And number 3, digital rights management. Currently, there is no real decentralized storage location for content creators. Centralized storage options exist, however, this leaves creators at the mercy of centralized platforms that can censor or delete their data without warning. Render leverages blockchain technology to ensure storage along with traceability when it comes to intellectual property rights. So how does the Render token gain its value? Well, Render is an ERC20 token, meaning it lives on the Ethereum network. In the Render ecosystem, users submit their jobs to the community. The platform automatically calculates the amount of Render token required to perform the job. This data is then sent to an attachment that details the requirements to a smart contract. The information is then broadcasted across the Render network. GPU owners use Octane Render, which is a rendering application to process the requested job. Render relies on a multi-tier pricing protocol that uses users' reputational scores to determine job allocation and ensure high-quality service. Creators can choose from 3 tiers: Tier 1, Trusted Partners, Tier 2, Priority, and Tier 3, Economy. Tier 1 services are generally completed by more reputable GPU rendering service providers, who as a result charge a higher fee. Creators also receive reputational scores based on feedback, which determines how many jobs they can submit at any given time. In summary, higher rank creators have access to higher rank job operators, and this whole transactional economy is ran by the Render token. As a result, the value of Render token itself is derived from the demand of usability of the network by both creators and operators. Believe it or not, Render is a bit of an OG in the space, with their initial coin offering taking place back in 2017. Just under 5 million coins were publicly sold at 25 cents, followed by several private sales throughout the years. Currently, Render is sitting around $3.3 with a max supply of circa 536 million coins. Only 25% of the supply has been either publicly or privately sold, with a whopping 65% or 345 million coins sitting in escrow to mitigate any future supply or demand issues within the network. As promising as the price action has been for Render, ignoring the fact that only 25% of max supply is currently circulating in the marketplace would be a major red flag if investing into Render. However, that being said, the token did hit $7.7 back in November 2021. Now, where does the AI link come into play regarding Render? Well, it all stems back to the widely known company Nvidia. Earlier this year, Nvidia passed the 1 trillion mark in market value thanks to the exploration into AI. It has been claimed that training ChatGPT-3 to be fully functional required over 10,000 Nvidia GPUs, and that doesn't even take into account the supply constraints in the semiconductor market. Given the boom in AI advancements, it's a fact that there will be a constraint on GPU supply as demand skyrockets. As a result, investors have been looking for an alternative asset or investment that could solve the pending GPU crisis as we enter this AI world. So enter the Render network, the perfect solution to a very complex problem. Will you be investing into Render? Let me know your thoughts down in the comments.